First, illustration number 4. M held 2000 shares in a company ABC Limited, an Indian company. This company amalgamated with another Indian company XYZ Limited. During the previous year ending 31st March 2025, under the scheme of amalgamation, M was allotted 1000 shares in the new company. The market value of the shares allotted is higher by 50,000. Meaning whatever the cost was there of the original shares, old shares, over and above that 50,000 more was the value of the new shares coming to you. Yes or no? Then the value of holding of ABC Limited. The assessing officer proposes to treat the transaction as an exchange and to tax 50,000 as capital gain. Is he justified? The answer is no. The AO is not justified to charge this 50,000 gain, 50,000 amount under the head capital gain, because this gain is arising due to transfer of old shares in the amalgamating company in lieu of new shares in the amalgamated Indian company. And this transfer, my dear friends, is an exempt transfer under section 47. Hence, no capital gain needs to be taxed. The intention of assessing officer to charge this 50,000 is not justifiable. It is wrong. Yes or no? Will you be able to write down this? But don't worry, this type of questions will not come in the exam. Okay. But it was just to make sure that how much you have understood. Okay, no? So, number 4 is done. Now coming to number 5. Number 5. In which of the following situations capital gain taxability does not arise? Okay. Mr. A purchased gold in 1970 for 25,000. In the previous year 24-25, he gifted it to his son at the time of marriage. Fair market value of the gold on the day the gift was made was 1 lakh. See, the transfer is made by way of gift by an individual. Hence, the transfer is an exempt transfer under section 47. No capital gain will be taxable in the hands of Mr. A. Understanding? But his son, who is getting the asset by way of what? Gift. His son, who is getting the asset by way of gift. For the son, the gift can be taxable under the head IFOS as his income. Will not be taxed there also, because any gift received at the time of marriage is also not taxable as IFOS income. Done, sir? So, will there be any capital gain arising in the hands of transferor? No, because the transferor is transferring by way of gift. That's it. But, right? Next one. A house property is purchased by Hindu Undivided Family HUF in 1945 for rupees 20,000. It is given to one of the family members in the previous year 24-25 at the time of partition of the family. The FMV on the date of partition was 12 lakhs. So 20,000 property, the cost of that property has become 12 lakh right now. So there is a gain of 11 lakh 80,000. Will that gain be taxable right now in the hands of HUF? The answer is no. Section 47, clause 1, the transfer is an exempt transfer in the hands of HUF, because any transfer of any capital asset by the HUF to its member on its partition is an exempt transfer under 47. Will you remember? So this will not attract any capital gain. This transaction will also not attract any capital gain. Yes or no? Next one. Mr. B purchased 50 convertible debentures for 40,000 in 1995, which are converted into 500 shares worth 85,000 in November 24 of the company. Debentures getting converted into shares. This conversion is also an exempt transfer. So any gain arising on conversion of debentures into shares will be taxable, will be chargeable to capital gain, or will not be chargeable? Will not be chargeable. Will you remember? The thing which I have spoken is there given in the answer. Now, sixth one. Abhishek, a senior citizen, mortgaged his residential house with a bank under a reverse mortgage scheme. He was getting a loan from bank in monthly installments, meaning that the loan which he got from the bank now is not a lump sum amount, rather he is getting a monthly amount from the bank as a loan. First of all, this monthly amount which he is getting from the bank by mortgaging his residential property under the scheme of reverse mortgage, yes or no, will be fully exempt in his hands under section 1043. So the amount coming to him as a loan will not be taxable for him. That amount is fully exempt. 1043. Next one. Mr. Abhishek did not repay the loan on maturity and hence gave possession of the house to the bank. So from Abhishek, the property is going to the bank. Why? Because that 20 years time has gone. Maturity, no. So reverse mortgage scheme will mature after 20 years. So on maturity, Abhishek was alive and he could not repay the loan. He did not have the money. So he gave his property to the bank. That bank, you only take this property now. Has the Abhishek transferred the property to someone else or he has transferred it to the bank only? Exempt transfer. Will not attract any capital gains in the hands of Abhishek. Even the bank will sell to get the money back along with interest, yes or no? For that, the bank will also not be liable. Getting my point, everyone? So, how will the treatment of long-term capital gain be on such reverse mortgage transaction? This is an exempt transfer, hence there is a no capital gain arising in the hands of Mr. Abhishek. Next one. Examine with reasons whether the following statements are true or false. Alienation of a residential house in a transaction of reverse mortgage. Alienation means giving away. Alienation means giving away. Under a scheme made and notified by the CG is treated as transfer for the purpose of... is it treated as transfer for capital gain? No. That is not treated as transfer for capital gain. That is an exempt transfer. So the statement is false. That is not treated as transfer for the purpose of capital gain. This transaction is treated as exempt transfer under section 47. So, zero coupon bond of eligible corporation held for 14 months will be long-term capital gain. Absolutely yes. Because for them we check the period of holding 12 months. And if they are held for a period of more than 12 months, they are treated as long-term capital asset. Yes or no? Next one. So the transaction is true. Zero coupon bonds means a bond on which no payment and benefit are received or receivable before the maturity. Very true, sir. Till the time they are not matured, there will not be any benefit given. There will not be any returns which will be given till the time they are matured. Yes or no? So the transaction which is given is absolutely a true statement. Correct, sir? Done. Question number 11. Mr. C purchased a residential house on 20th July 22. So this is the date of acquisition of the residential house for rupees 10 lakh. That was the actual cost, and made some additions, meaning the cost of improvement to the house, incurring 2 lakh, meaning 2 lakh is the cost of improvement which was incurred in 2022-23. He sold the house property in April 24 for 20 lakhs. Wow, wonderful. For how much he has sold? 20 lakhs. Out of the sale proceeds, he spent 5 lakhs to purchase another house property in September 24. Even if he has spent the amount on purchase, amount spent was 5 lakhs. Yes or no? Even if that amount is spent within the time limit Meaning 1 year backward, 2 years forward, or 3 years forward. See, no, what was the date of transfer? April 24. So 1 year backward, April 23. 2 years forward, April 26, or 3 years forward, April 27. Within that time only, see, in September 24, the new property is purchased. Even before the due date of filing your ROI. This you can claim the exemption out for this investment, but the exemption can be claimed out of LTCG. In this question, you are not going to calculate LTCG, you are going to calculate STCG. How come, sir? See, date of acquisition is 20th July 22. Date of transfer is April 2024. So July 22 to April 24 is a period of less than 24 months for this immobile property. So the immobile property is not a short term asset, it is a long term asset. Sorry, it is not a long term asset, it is a short term asset. So for short term asset, we are going to calculate short term gain. And out of the short term gain, whatever amount you have invested will not allow you to take any exemption. Exemption under section 54 will be available only if you invest in the purchase or construction within the given time. Out of your long term gain you invest, this investment will not allow you to take any exemption. Entire short term gain will be taxable, and it is very easy to calculate short term gain. Take the full value of consideration minus transfer expense. There was no transfer expense. Net consideration will be same amount minus cost of acquisition minus cost of improvement. You will get the short term gain. That's it. Taxable at normal rates. Sure, sir. Should I move ahead? Now, in this same question, now we are changing something. Don't do anything right now. I will make you all right. Okay. What if they told you that the date of acquisition given by them would have been 20th July 22? No, 20th July 21. Now from 20th July 21 to April 24, period is more than 24 months. Now the gain will be calculated? The answer is yes. Now the gain will be long term. And don't you think the transfer is made prior to 23rd July 2024? Transfer is made in April 24. So here now there will be indexation also. Open your notebooks, write down. In the illustration number 11, if the date of acquisition was 20th July 2021 instead of 20th July 2022, then the computation of capital gain would have been done, computation of taxable capital gain would have been done in the following manner. Would have been done in following manner. Hello, sir. One minute, huh? Write down FVC, 20 lakhs. FVC 20 lakhs. Write down fast. Less transfer expense. Less transfer expense. Nil. So the net consideration is 20 lakhs. Less cost or index cost? Index cost of acquisition. Less index cost of acquisition. On your screen, see this. Cost of acquisition was how much? 10 lakhs, no? Incurred in July 21 now. Because we have changed the date of acquisition, okay, no? So now don't take July 22, July 21. So previous year 21-22 will be the acquisition year. So CII of acquisition year will be 21-22. That will be how much? 317. And transfer year CII we already know. So cost of acquisition into transfer year CII divided by acquisition year CII. This will be the CII for 21-22. Your index cost will be this much. Now the cost will be indexed because the asset is long term and the transfer is made prior to 23rd July 2024 in April 24. Yes or no? And index the cost of improvement also like this. Done, sir? Cost of acquisition, cost of improvement both indexed. Reduce. This will be your gross long term capital gain. 6,35,555. Everyone getting this? Now wait. Do you have a long term capital gain on transfer of residential property? Yes. Now investment is made in another residential house property. 5 lakhs rupees. Check in the question. And that investment is made within the given time. So you have transferred in April 2024. Within 1 year backward, 2 years forward, the transfer the purchase is already made. So that 5 lakh will qualify under section 54. Yes or no? Meaning that 5 lakh invested out of this long term gain only. So long term gain to the extent of 5 lakhs can be exempted, no? Hello? So the calculation will be done like this. Long term capital gain is 635,555 or investment in purchase of new residential house property in September 2024. That was how much? 5 lakhs. So out of that long term gain, this much is invested. That means this much only can be exempted out of your long term gain. If the investment would have been 635,555 or more than that, then the entire long term gain would have been exempted. But since the amount of investment is less than your long term gain, to the extent of that investment only, the gain can be exempted. And the balance amount will be taxable. Now this is your long term capital gain which you tax under section 112, and the rate of long term gain, rate of tax on long term gain under section 112 is how much? 20%. So if they also tell you to calculate the capital gain over here, no, what you will do? Sorry, they also tell you to calculate the tax also. What you will do? Apply 20% tax rate on this amount. So you will get 27,111 as your income tax liability. Yes or no? Now this you have calculated assuming that other incomes were more than basic exemption limit. So apart from this capital gain, other incomes were there. They were more than basic exemption limit. On that you are paying tax. Hello? As per normal rates or 115 BSE rate as the case may be. And on this amount you are separately paying how much? 20%. 20% why? Because the transfer was made prior to 23rd July. So on such transfers, whatever long term gain arising under section 112, it was taxable at the rate of 20% till 23rd July. Now the rate has changed to 12.5%. Yes or no? Did you understand this much? Now write down again. If in the above question, instead of April 24, the date of transfer would have been 30th August 2024. Date of transfer would have been 30th August 2024. Then computation of taxable capital gain. Would have been done in the following manner. Don't copy. No need to copy. First, FVC 20 lakhs minus transfer expense nil. Net consideration 20 lakhs minus cost or index cost. Now tell me. Index cost. Transfer is happening on or after 23rd July. I have changed the date of transfer in this example. So now what will happen? Will there be any indexation to cost? No. So reduce the cost of acquisition 10 lakhs and reduce the cost of improvement also 2 lakhs without any indexation. So your capital gain will now be how much? 8 lakh. But now this 8 lakh will not be short term. Now this will be long term. Why? Because you have not changed the date of transfer, date of acquisition. Date of acquisition remaining July 2022 only. In the example prior to this, I changed date of acquisition. Now the date of acquisition is same, 20th July 2022. But now I am changing the date of transfer just to make it what? Long term. Now but this time it will become long term, but the indexation will not be available. Last time the indexation was available. This time the indexation will not be available. Why? Because the transfer is on or after 23rd July. So now the entire long term gain will be how much? 8 lakhs. Yes or no? Now can you claim the exemption out of this? Yes. Claim the exemption. How will you claim? First of all, write down 8 lakh is your gross long term capital gain less exemption under section 54. Underline amount of capital gain, amount of investment. Just like the way in which we did last time. Please do it like this. Done, sir. Now the balance capital gain which is there, that is the taxable long term capital gain under section 112 only. But now on this you are supposed to pay 12.5%. But wait. Are you a resident individual transferring immovable property which you acquired prior to 23rd July 2024 and you are transferring on or after 23rd July 2024? So for this type of residential property, indexation benefit will not be given. Capital gain will be taxable at 12.5%, but you are given one option also. At the time of calculating the tax, you are given one option also. Calculate your capital gain by taking the indexation and apply 20% on that. Either that 20% or this 12.5%, whichever is lower, that tax you pay. Yes or no? So can you calculate 12%, 12.5% tax on this 3 lakhs? Calculate, it will be 37,500. Now you are supposed to calculate the tax on the long term capital gain with indexation, and which we have already calculated earlier. Okay, and that tax will be 20%. So 20% tax on the capital gain with indexation will be 27,111, and 12.5% tax on the capital gain without indexation will be 37,500. Which tax you would like to pay? Higher tax or lower tax? Lower tax. 27,111 will be your final tax liability. And in this also we are assuming that same thing. What? The other incomes are more than basic exemption limit. And you are supposed to calculate tax on this only. Why that assumption was taken? No, I will tell you later on. Easy peasy. Will you be able to crack such kind of questions? Perfect. Wonderful. Illustration number 12. Long-term capital gain of 75 lakhs arising from transfer of building, meaning an immobile property is transferred. On the transfer of that immobile property, long-term capital gain is 75 lakhs. And this long-term capital gain is arising from the transfer of the building, and the building was transferred on 1st of May 2024. So from 1st of May 2024, this is the date of transfer. From that date, we are supposed to count 6 months. Okay. So what are 6 months? 1st November 2024. 1st May to 1st November. Okay. Now, okay, so the building will be building is transferred on 1st May. The long-term capital gain on transfer of this building will be exempt if such capital gain is invested in the bonds redeemable after 5 years issued by NHAI. Examine the reasons whether the given statement is true or false. False. It cannot be exempted fully. If the long-term gain is invested in the bonds, it can be claimed as exempt under section 54 EC, but it cannot be claimed entirely exempt. Getting my point? It can be exempt up to the limit of maximum 50 lakhs, because the investment in the bonds of NHAI, even if the entire gain is invested, still the benefit will be available to the extent of 50 lakhs only, because any bonds purchased over and above 50 lakhs, that will be ignored. Yes or no? So this was your illustration number 12. Whatever I have discussed, you will find it here. Okay. Now let's move on to the next question. Come to question number 5. Ready? Okay. Mr. Sarthak entered into an agreement with Jai Kumar to sell his residential house located at Kanpur on 16th August 2024 for 1 crore 50 lakhs. So, can I say this is the date of sale agreement, date on which the sale agreement is entered, 1 crore 50 lakhs. As on that day, the sale price is 1 crore 50 lakhs. Okay. Okay. Now the sale proceeds is to be paid in the following manner. So both of them agreed that 20% will be paid through account pay check on the date of agreement. So as on the date of sale agreement, 20% sale consideration is paid by way of account pay check, prescribed modes. So now there will be stamp duty value given. Stamp duty value as on the date of sale agreement, stamp duty value as on the date of registration, and one more stamp duty value will be given. 3 stamp duty values are given. Out of the 3 stamp duty values, you will ignore all the stamp duty values, but you will take the stamp duty value as on the date of sale agreement, because as on that day, the consideration or any part thereof is paid by way of prescribed modes. So, can you see 3 stamp duty values given? One on 16th of August, another on 15th of December and 14th of January. 15th December, what is happening? See, 60% on the date of possession of the property. So, the possession will be given on 15th of December. And the balance on the completion of registration of title. So the title will be registered, means the sale agreement will be registered, the property will be registered on the name of the buyer on some other day, meaning in the month of January. Okay, no? So Jai Kumar handed over the possession of the property on 15th of December. This is the date on which the possession was given, and registration took place on 14th of January. Getting my point? So 3 dates are there, one by one. First date is DOSA, date of sale agreement. Second date is date of possession. Third is date of registration. As on the date of registration, the property is finally transferred. So actual date of transfer is date of registration only. Yes or no? Date of sale agreement, date of possession and date of registration. See, The sale consideration is 1 crore 50 lakhs. This is 15th of November 2024. 15th November, 16th of August, sorry, 16th of August. This is 15th of December 24. This is 14th January, no? 14th of January 2025. As on the date of sale agreement, no? 20% of this will be paid. And by way of account pay check. As on 15th of December, date of possession, how much is to be paid? 60%. So how much is the balance? 20% when the registration will be done on the name of the buyer. Now 20% of this will be 30 lakhs. 30 only, no? This also 30 lakhs. And this will be 90 lakhs. So the entire sale consideration is paid in these installments. Now see, as on the date of sale agreement, the stamp duty value was, what was the stamp duty value? Come on, tell me. Stamp duty value. 1 crore 71 lakhs, no? 1 crore 70. 71 and 7150. Now tell me, stamp duty values are higher than the sale consideration. Stamp duty values are higher than the sale consideration. Can you check all the three stamp duty values? But we have to check, we have to take any one stamp duty value. Which one should I compare with the sale consideration? With the sale consideration, I will compare this one. Dosa. I will not compare this one. I will not compare this one. Why? Because as on the date of sale agreement, the consideration or any part thereof is paid by way of account pay check. Then as on the date of sale agreement, whatever stamp duty value was there, I can consider for the purpose of section 50C. Other stamp duty values I will ignore. So now tell me, can I say my stamp duty value, which is 1 crore 70 lakhs, is higher than sale consideration of 1 crore 50 lakhs? Yes sir, it is higher only. And can you check the difference? Difference is equal to 20 lakhs. And this difference is also higher than 10% of sale consideration, which is 15 lakhs. Difference is higher than 15 lakhs, no? Therefore 50C will be applicable. And if 50C is applicable, then FVC is equal to sale consideration is equal to 1 crore 50 lakhs. Cannot be taken. My FVC will be stamp duty value, which is 1 crore 70 lakhs. So now the first amount to calculate the capital gain is full value of consideration. See how complicated they are making the things. But actually the things are not complicated. We have learnt everything. But the way in which they are presenting in the question, no, they are, they are using the language. From that language, it becomes so complicated. It becomes so difficult. But it is not actually difficult. Did you understand this much? Sure? Okay. Now, FVC we have taken. Mr. Sarthak had acquired the residential house on 1st April 2001. Oh, for 30 lakhs. So this was 30 lakhs was the cost of acquisition. Yes or no? And then after recovering the sale proceeds from Jai Kumar, he purchased two residential house properties, one in Kanpur for 20 lakhs on 24th March 2024 and another in Delhi for 35 lakhs. Okay. Compute the income chargeable under the head capital gains for Mr. Sarthak for the assessment year 25-26. CII also given. But CIIs I will not use. Why? I'll tell you. See. Out of the three dates, no, always the date of registration is treated as what? Date of transfer. This is the date of transfer. So can I say the date of transfer is on or after 23rd July 2024? So cost will be reduced with indexation or without indexation? Without indexation. So in order to calculate my capital gain, do I have full value of consideration? Yes sir, I have. Now less what? Less transfer expenses, that is nil. So my net consideration will be how much? 1 crore 70 lakhs. No transfer expense, no guys. So I will now reduce less cost of acquisition, which was 30 lakhs only. So I will get long-term capital gain only. Sir, why did you calculate long-term capital gain? Because the property was acquired on 1st April 2001. From that date till 14th of January 2025, this was the period of holding which is greater than 24 months. Therefore, capital asset is long-term capital asset and accordingly the gain is long-term capital gain. No indexation to be allowed. Since date of transfer is on or after 23rd July 24. Hence my long-term capital gain will be 1 crore 40 lakhs. Did you understand this much? Tell me yes or no. Now out of this long-term capital gain of residential property, I can claim the exemption under section 54 provided investment is made in new residential property. So I have acquired two residential properties, one in Kanpur and one in Delhi. Yes or no? And don't you think I have the option to invest in two residential house properties and take the capital gain as exempt? Why? Because my long-term gain is not more than 2 crores. So I have the option to invest in two properties and claim the capital gain as exempt. Yes or no? So both the properties investment I can consider provided both the investments are made within the given time. So I will have to see that what was my date of transfer? 14 January. 1 year backward, 2 years forward from this for purchase. 1 year backward, 2 years forward. So can I say any purchases made between 14th January 2024 to 14th January 2027, any purchases made will qualify for section 54? So can I say the investment in Kanpur property was made on 23rd March 2025 only, and investment in Delhi property was made on 28th May 2025, meaning have I invested within the time? Yes, and even before the due date of filing my ROI, I have invested in both the properties. So in this return of income which I am going to file for this year, will I be able to claim section 54 exemption? Yes. By investing in both these properties, I can claim the exemption, because two properties investment can be claimed as exempt under section 54 if the amount of long term gain is less than or equal to 2 crores. In my case, it is less than equal to 2 crores, 1 crore 40 lakhs only. So I can invest my entire long term gain in two properties like this. Hello, sir. So what will happen here? Come on. LTCG. This was your gross LTCG. I'll write it gross LTCG. Now out of this I will reduce exemption under section 54. That will be A. Gross LTCG, which is 1 crore 40 lakhs only, or B, which is investment in purchase of Kanpur property and Delhi property. What was the Kanpur property cost? It was 20 lakhs and Delhi is 35. 20 lakhs and Delhi is 35 lakhs. Total is 55 lakhs. So 140 or 50, whichever is lower. Whichever is lower, come on, tell me. 55 is lower, no? So can I say out of 1 crore 40, 55 lakhs will be exempt? And how much will be taxable now? 85. Taxable 85. Very good. If he would have acquired one more property, then he has acquired three properties. Any two having highest investment value, having highest cost, could have been considered. If he would have acquired one property in Kanpur and another property in Colombo, property must be acquired in India. So automatically the property which is acquired outside India will disqualify. Getting my point? But since both the properties are acquired in India, investment in both the properties can be counted. Why both? Because the amount of capital gain is not more than 2 crores. So this is your taxable LTCG under section 112, and on this we charge tax at the rate of 12.5%. 12.5% without indexation. Hello? But can you calculate with indexation also? Absolutely yes. Because the property was acquired prior to 23rd July and transferred on or after 23rd July. So you will get the option to calculate the tax on the long-term gain with indexation at the rate of 20%. You will get that option also. So first what we'll do, we'll calculate 12.5% of this. Calculate. So this is my long-term capital gain. Now tax at the rate of 12.5% on LTCG without indexation. So 12.5% of 85 lakhs will give me how much, sir? 1 lakhs 10 lakh 62,500. 10 lakh 62,500. Now I have the option to pay tax at the rate of 20% also on LTCG with indexation. So now I will have to recompute the long-term gain. What I'll do, I'll just calculate the cost. I'll just index the cost. Rest everything remaining same only, no? So from start till end, everything will remain same, including the exemptions and all. Getting my point? But the cost will be indexed. Done? You actually index the cost. Why? To compute the capital gain computation will not be index. That will be without indexation only. But only to calculate the tax liability, you are going to calculate the capital gain with indexation. Yes or no? So now, what will be the long-term gain with indexation that we are going to first calculate? Okay. Can I take the net consideration of 1 crore 70? Yes. Minus index cost 30 lakhs into 363 divided by 100. 30 lakhs into 363 divided by 100. What is the index cost? 1089,0000. 1 crore 8 lakh 90,000. 1 crore 8 lakh 90,000. Everyone got this? So what will be the gross LTCG? Come on, tell me. It will be 68 lakh something. 68 lakh 10,000. 61 lakh 10,000. 61 lakh 10,000. Now out of this, I'll take the exemption. What was my exemption? Under section 54. What was the exemption? Come on, tell me. It was 55 lakhs, no? So take the exemption of 55 lakhs. How much remaining? Tell me. It will be 6 lakh 10,000 only. And on this, 20% I have to apply. Apply 20%. 122. Now they are telling you to pay tax. Either you pay 122 or you pay 10 lakh 62,500. Which one would you prefer? Definitely 1 lakh 22,000, no? Therefore, tax on LTCG under section 112 lower of about 2 taxes, which is 1 lakh 22,000. Now with this tax, the tax on your other income will also be added. Then there will be surcharge or there will be rebate, tax including surcharge, tax after rebate. Then on that 4% will be applied. All those things we are supposed to do. Okay, no? But those things are not given. I'll just calculate this tax. That's it. Have they told you to calculate this tax? See the required part of the question. Have they told you to calculate the tax or just calculate the capital gain? Yes. So your answer actually has to stop here. Okay, no? But why we have done? In that same question, they can give you calculate the tax also. Then your calculation should be like this. Sure, sir? Should I move ahead? Very good, sir. What if the date of transfer was prior to? What if the date of transfer was prior to 23rd July? Then the cost must be indexed. Your capital gain computation would not have been 85 lakhs. It would have been how much? 61 lakh 10,000. And out of that, you would have taken the exemption 55 lakhs. Your final capital gain would have been 6 lakh 10,000 only. On that, you would have paid 20% directly, since you transferred the asset prior to 23rd July only. Then all this discussion was not required also. Getting my point? Okay. Question was good question, no? Now come to the next question. Mark the above question important, the question number 4. Mark that question number 5 which we have done just now. Mark this question important and mark this question also important. Question number 6. Very good question. Okay. Mrs. Yuvika bought a vacant land for 80 lakhs in May 2005. 80 lakhs is the cost of acquisition. May 2005 is the date of acquisition. Registration and other expenses were 10% of the cost of land. So what was the cost of land? 80. 10% of that, 8 lakhs. So 80 plus 8 lakh is 88 lakhs. That is actual cost of the land. Yes or no? So actual cost, I'll write down here. Actual cost. How much is actual cost, sir? 80 lakhs plus 8 lakhs. 8 lakh means 10%. Yes or no? That will be 88 lakhs. Next one. She constructed a residential building on the said land for 100 lakhs during the financial year. Wait, one moment. Only 1 minute. Only 1 minute. This is what is happening. See, he acquired a land. She acquired a land in May 2005 for 80 lakh. 10% was the additional cost. Okay, no? So total cost of acquisition is actual cost 88 lakh. Can I say this is the cost of the land? And on this land, a building was constructed. Residential house was constructed. So the construction of the residential house completed in 2007-8. And the cost of construction was 1 lakh is nothing but the cost of that residential house. Okay, no? Now I have land and building. Land date of acquisition is different. Building date of acquisition is different. Okay. Now this land and building, what is happening? In 2015, April 2015, she's trying to sell. And sale consideration was fixed at 700 lakhs. And in April 15, 700 lakhs was the sale consideration. On 23rd April 2015, she is receiving 20 lakh rupees as advance in cash from the buyer. But the buyer could not pay the balance amount. So this 20 lakh which she received as advance, she forfeited. Do you remember any advance money received and forfeited in the course of negotiations for transfer of a capital asset, but the negotiations did not result into actual transfer? That advance money, if received and forfeited on or after 1st April 2014, then it was already taxed under the head IFOS. On or after 1st April 2014, received and forfeited, taxed under the head IFOS. No need to adjust under section 51. So even though this advance money is received and forfeited, I will not adjust out of the cost of Yuvika. Hello? Because it was received on or after 1st April 2014. That is something which I have written. April 15, meaning on or after 1st April 2014, advance received and forfeited how much? 20 lakhs. And this is not to be adjusted under section 51 because this was already taxed in 15-16 under the head IFOS. Forget about this now. What is happening now? Now, Mrs. Yuvika again entered into an agreement on 1st of May 2024. This is the date of sale agreement, DOSA. for sale of this house at 810 lakhs, meaning this is the sale consideration 810 lakhs. She received 80 lakhs as advance by RTGS. So as on the date of sale agreement, she is receiving some part of the sale consideration, meaning 80 lakhs, in the form of prescribed modes. Hence, any stamp duty value as on the date of sale agreement will be considered for section 50C. Yes or no? So what is happening? The stamp duty value on the date of sale agreement was 890 lakhs. This I will consider. The sale deed was executed and registered on 14th of July 2024. So actual transfer happened on 14th of July 24 only. Hello sir. Because the sale agreement was registered on 14th July. But the stamp duty value as on 14th July 2024, I will not take that because that is 900 lakhs. Can you see? So 900 lakh rupees of what stamp duty value I will have to ignore because I am going to take 890 lakhs. That is the stamp duty value as on the date of sale agreement. Yes or no? Now, Mrs. Yuvika paid 1% as brokerage. Okay. And now, what are the acquisitions and investments that we are going to see? But first, we'll calculate the capital gain based on this information. Everyone. So now, here, sale agreement entered. Sale agreement entered on 1st May 24. As on that day, the stamp duty value was 890 lakhs. And as on the date of sale agreement, out of the 810 lakh rupees of sale consideration, 80 lakh was received by way of prescribed modes. So this stamp duty value I will consider. As on the date of registration, the stamp duty value is given. I will not consider this. Okay. And what was the sale consideration? 8 lakh 10. 1% of that is paid as brokerage. Entire question, see, I have taken all the information. Now based on this information only, I am supposed to solve. So tell me, will I take the full value of consideration? Yes. How much? 810 lakh is the sale consideration. I will take this or stamp duty value. Stamp duty value is higher than the sale consideration. By how much? By how much? Only 80 lakhs. Difference is 80 lakhs. Is it more than 10% of 8 lakh 10,000? The answer is no. If it would have been more than the difference between sale consideration and the stamp duty value, this difference is how much? 80 lakhs. If this difference would have been more than 10% of sale consideration, only then 50C will be applicable. Only then the stamp duty value will be taken as full value of consideration. Otherwise, I have to take the sale consideration only. Yes or no? So here 50C will apply or will not apply? Will not apply only. So I cannot take the stamp duty value. I guess you might have committed mistake over here only. No mistake? You have taken 810 only? Excellent. Very good. See, this difference is not more than 10%. Hence 50C not applicable. Full value of consideration is sale consideration only, 810. Now 10% of sale consideration, 1% of sale consideration is brokerage, that is transfer expense. So net consideration I will have. Now out of this net consideration, will I reduce cost or index cost? Index cost. Why? Because see, date of transfer I have to check. Date of transfer is always the date of registration. Can I say date of registration is 14th July? That is the date of transfer. Prior to 23rd July only. Hello sir. So if prior to 23rd July is there, what I will do? I will do the indexation of the cost. And for that, cost of land was 88 lakhs. Multiplied by CII of transfer year 363 divided by CII of acquisition year 2005-6. Hello. CII of 2005-6 will come, no? 2005-6 CII. Okay. So I will get 88 lakh into 363 divided by 117. I will get this much. This is my index cost of acquisition. Now I will reduce the index cost of acquisition of the building also, no? Because land and building both are transferred. So building's cost of acquisition was 1 crore into transfer year CI divided by CI of 7-8. See, building was constructed in 7-8. Getting my point? 7-8 to 24-25. So this will give me the index cost of acquisition of building. So from this entire net consideration, I will reduce both the index costs. Are you all getting these amounts? Have you calculated properly? Now my gross long term gain will be 2 crore 47 lakh 47,901. 24747,901. 24747,901. This is my gross long term gain. So can I say this is the gross long term capital gain on sale of residential house only? Residential house along with building. So this is nothing but the sale of residential house, long term gain on sale of residential house. Can it be invested in another residential house? Yes. How many residential houses I can buy? If the long term capital gain, this amount would have been less than or equal to 2 crore, then 2 houses, otherwise only 1. So is this amount less than equal to 2 crores? No sir, this is more than 2 crores. So now I will have to consider the investment in only one residential house property. Yes or no? Now can you see the assessee has invested in 3 residential houses? Tell me yes or no. First residential house he acquired in Delhi and second in Chandigarh for 130 lakhs and 50 lakhs. Okay. On 31st January and 15th of May. Both the investments, both the dates are within 2 years after the date of transfer. 14th July 2024. After 14th of July, within 2 years, the new residential house should be acquired. So these 2 residential houses are acquired within those 2 years, even before my return filing due date. Yes or no? So investment in both the houses eligible. But I cannot take both the houses investment exempt for section 54. I will have to take only one. See, one more house was acquired. But was that acquired in India? No. That was acquired in Uttarakhand, no? UK means Uttarakhand, no? No. United Kingdom. Hello? So how much? Tell me. How much was invested in this house? 180. This can never qualify for 54 because the investment made outside India. In a residential property outside India. This investment cannot allow me to take section 54 exemption. Yes or no? So I can invest in residential house property in India. So I have acquired 2 residential house properties in India. But both the investments cannot qualify. Only one. Which one would I prefer? The higher one or lower one? Higher one. So definitely I will consider the investment made in Delhi house property which is 130 lakhs. And Chandigarh I will ignore. Hello sir. So out of the 3 investments made in the residential house, only one investment can be counted. Outside India, forget. In India, consider. But out of those 2, only one. That is 130. Can I say this amount can be exempted under section 54? So how much was my long-term capital gain? 247,47,901. Yes or no? Either that amount or the amount invested in new residential house, 1 crore 30. Whichever is lower, I will get 1 crore 30 as exempt under section 54. So though my balance long-term gain will be this much. Now can I say you have acquired the bonds also, NHAI bonds, approved under 50 for 50 lakhs on 30th November 24 and 40 lakhs on 9 January 25. Wow. See, from 14th July, if you count 6 months, 14th July was the date of transfer of your immovable property. From that day, you have to count 6 months. 14th July to 14th August, September, October, November, December and January. Till 14th of January, whatever investment made can qualify. But that investment in the bonds cannot be more than 50 lakhs. So can I say this entire investment of 50 and 40, 90 lakhs is made within 6 months only. But that 90 cannot be fully qualifying because any investment in the bonds over and above 50 lakhs within 6 months also over and above 50 lakhs will be ignored. So how much was my capital gain, guys? This much was remaining. So this I can exempt provided this was invested in bonds. So was it invested in bonds within 6 months? Yes, it was invested in bonds in 6 months, but the investment was 90. So out of that 90 invested, but 90 will not qualify, only 50 will qualify. So 90 or 50, whichever is lower, 50. 50 or capital gain, whichever is lower, 50. Yes or no? So out of my capital gains, 50 lakhs will be exempt, and what will be taxable? 6747,901. And this long term capital gain is arising on transfer. This is a taxable long term capital gain arising on transfer of a residential house on or prior to 23rd July. On this entire amount I will have to pay 20% because I have done the indexation also, and this is the long term capital gain calculated after taking indexation. On this I have to pay 20% only. Will you remember this? Very easy question. Very, very, very easy question. Got it, sir? Should we move ahead? Very good, sir. So now only one question remains from test your knowledge. All the other questions are done. Only question number 1 remains. Yes or no? And question number 13 remains from illustrations. Now do you remember one question more we have solved? Harshita. Here only. See. Question number 3. Question number 3. We solved this question till here only. And I told you not to read this balance part. Now please do the needful. We have to read this part also. Okay. She invested 50 lakhs in the bonds issued by National Highways Authority of India on 31st March 2025 and another 50 lakhs in the bonds of RECL in April 25. Compute the amount of capital gain and business income in the hands of Harshita arising from the above transaction, indicating clearly the reason for treatment of each item. Pay attention, huh? See, you had land, do you remember? Which you converted into stock in trade. On this land, which is your stock in trade, you constructed some flats. Now the land along with the flats is sold. Conversion is a transfer. Conversion is transfer. But on conversion, the gain will not be taxable. The gain will be taxable as on the date. Gain will be taxable in the year in which the stock in trade is sold. So the stock in trade is sold. Stock in trade is sold in the month of March 25. So both your PGBP income as well as capital gain will be taxable in 24-25 only, because the stock in trade is sold in March 25. So in the case of conversion, whatever gain which was arising under section 45(2) will be taxable in the year in which the stock in trade is sold. Okay, now. So now this long-term capital gain on what? Land, meaning an immobile property, computed under section 45(2) will be taxable in the year of conversion. Year of transfer? No. Will be taxable in the year of sale of stock in trade. So if this long-term capital gain under section 45(2), which is taxed in the year in which the stock in trade is sold, can it be exempt under section 54 EC? Yes. But for that, you need to invest in bonds. Bonds of NHAI, RECL, PFC, etc. Yes or no? But those bonds must be acquired within 6 months from the date of transfer, no? Date of transfer, no? Or date of sale of stock in trade? Yes, because this is the date based on which your capital gain is taxed, no? Your capital gain will be taxed in the year in which the stock in trade is sold. So definitely the investment should be made in the new asset, in the bonds, within 6 months from the date of sale of stock in trade only, no? So 6 months from this you have to count. March 25, full month you count, assuming that 1st March was the date of sale. Okay, no? So March, April, May, June, July and August. March, April, May, June, July, August. 6 months are there. So starting from March to August 2025, these are the 6 months. Within these 6 months, the investment should happen in the bonds. Some investment happened here in 24, 25. How much? 50 lakhs. Some investment happened here in previous year 25, 26, 50 lakhs. You see in the question, some 50 lakhs investment made in March 25 and another 50 lakh investment made in April 25. Both the investments are made within 6 months only from the date of transfer, no date of sale of stock in trade. Because this is the date on the basis of which your capital gain is getting taxed in this year, no? So if your capital gain is getting taxed in this year based on this date, so investment in the bonds should be made within 6 months from this date only, no? Hello, sir. So what will you do now? Come on, tell me. Total investment made is 1 CR within 6 months. Cannot be more than 50 lakhs. So the amount invested in bonds, is it more than 50 lakhs within these 6 months? Yes or no? Will not be counted over and above 50. Ignore. So how much investment will be counted? Only 50. So either the amount of long-term gain which is getting taxed right now. How much was the long-term gain which was getting taxed right now? You must have calculated when you have calculated this question. Come on, tell me. How much was the capital gain? 1022 something something. No, 68,14,159 was the long-term capital gain to be taxed when those 5 flats are sold. 1022 something something was there. Yes, 1022 1239. 1022 1239. This was the long-term capital gain under section 45(2) on transfer of what? This is the long-term capital gain on transfer of land. Transfer of land means conversion of land. On conversion of land into stock in trade. Okay, no? Long-term land into stock in trade. So this is the long-term gain. Long-term gain on conversion of land into stock in trade calculated under 45(2). This is getting taxed right now because this is getting sold as stock right now. This much land is getting sold as stock in trade right now. Getting my point? So out of this only, now I will take exemption under section 54 EC. How much exemption? Either the amount of capital gain or amount invested, which cannot be more than 50 lakhs. So this is A, this is B. B is this or this, whichever is lower. So 50 lakhs will be taken. 50 or this, whichever is lower. So tell me, 50 lakhs will be taken as exemption, no? So how much is the capital gain taxable? 52,21,239. This is taxable LTCG. Please check the answer. Textbook. Study mat. Check the answer. Did you understand what happened? Sure. Half part we calculated earlier. There we got the capital gain of 1 crore 22 lakh something something. Hello, sir. So out of that long-term capital gain, I now want to claim exemption under section 54 EC. Can I claim? Yes, because that was the long-term gain on transfer of, on conversion of land. But which was not taxed at the time of conversion. It was taxed in the year of sale of stock in trade, in the year in which it is converted, in the year in which it is sold as stock in trade. So if this year it is getting taxed because in this year it is getting sold as stock in trade, so out of this long-term capital gain, can you claim exemption under section 54 EC? Yes. For that, you are supposed to invest in bonds within 6 months from the date of transfer. No, date of sale of stock in trade. Because this is a capital gain taxable under 45(2), will be taxable in the year of sale of stock in trade. The date of sale of stock in trade is important. From that date, you are supposed to count the period for investment in new asset. Okay. So what? Only 10 flats are sold then? 10 flats along with the land is sold as stock in trade. But the land was earlier a capital asset, no? So after conversion, it is getting sold as stock in trade. But before conversion, it was a capital asset only, no? So from the date when it was acquired as capital asset till the date of conversion, whatever gain was there, that gain we have calculated under 45(2). But the gain for the entire land we have calculated, entire gain will not be taxed right now because entire land is not sold as stock in trade. Only the land with those 5 flats is, only the land with that 10 flats is sold as what? Stock in trade. You have still not got it. Do you remember this land I made? What you are trying to say? So, okay, entire gain was this much, you are saying, no? This was the total amount of gain. This was the total amount of gain. Out of this, I told you to tell me the total gain of only 10 flats. So you told me this answer, no? This watch. So this was your total capital gain or what? Total capital gain. Total capital gain, no. That total is not going to be taxed right now. I am asking how much is the capital gain which is getting taxed right now? Capital gain for the land which is getting sold along with the 10 flats. Only that much capital gain will be taxable, no? Or the entire amount. So I was asking you how much capital gain is taxed right now. This was the total. Hello sir. This was the total capital gain, no? Out of this, how much is for the 10 flats? 1022 1239 into 10 divided by 15. 68,14,159. Okay. So this will be 68. So I have written the full capital gain, not to worry. Correct. The things are correct only. Everything is correct. But the capital gain for land which is getting transferred as stock in trade right now, only that long-term capital gain will be taxable right now. And from that I am claiming the exemption. Yes or no? 68 lakh 14,159. So what about the balance capital gain? Balance capital gain, which relates to those 5 flats, those land occupied by 5 flats, that will be taxable later on. And whenever the 5 flats will be sold, that time the balance capital gain will be taxable. So that I am not supposed to consider here. By mistake I took the full amount because I thought that this amount is for 1022 was for how much? 10 flats. But for 10 flats it was not 1022. For 10 flats it was 68 only. This amount is to be considered. Correct. 68 lakh 14,159. 159. Out of this, if I take the exemption of 50, how much will be the taxable capital gain? 18,14,159. So this will be exemption. This will be 68,14,159 or 1 crore or 50 lakhs. This or this, whichever is lower, 50. Yes, correct. Now it is correct. Done. So this was your question number 3. The remaining part which we have done. Okay. Question 1. Mr. Mithun purchased 100 equity shares of Good Money Company Limited on 1st April 2007 at a rate of 1000 per share. Shares are purchased prior to 1st February 2018. Prior to 1st February 2018 in the public issue of the company by paying STT. So the shares are listed, you acquired in public issue, and at the time of acquisition you paid the STT also. Very good. Company allotted bonus shares in the ratio of 1:1 on 1st of December 2023. So 1000 bonus shares also you are getting. Sorry, 100 bonus shares also you are getting. He also received dividend of 10 per share on 1st May 2024. See, deliberately no, they'll give you multiple dates. Because students usually tend to get confused by looking at so many dates. Okay, don't get confused. First of all, in your mind, try to imagine what was happening, what had happened. Okay, now he sold all the shares on 1st October 2024. All the shares means 100 shares which he bought and 100 bonus shares which was issued to him. Okay, so for these 100 shares, the period of holding will start from 1st April 2007 to 1st October 2010. For these 100 bonus shares, the period of holding will start from 1st December 2023 to 1st October 24. Done? Next one. Oh, he is selling them for 4,000 per share through a recognized stock exchange and paid brokerage of 1% and securities transaction 0.02%. Very good. For STT, you are not going to get any. For STT, you are not going to get any deduction. So STT paid at the time of purchase, ignore that. STT paid at the time of transfer, sale, ignore that. Okay. Next one. Compute total income and tax liability if Mr. Mithun pays tax under default tax regime. Yes. Assuming that he is having other income of 8 lakhs, fair market value of the shares on 31st January 2018. The moment you will see this fair market value, no, understand that you have to calculate the long-term gain under section 112A. Done? Now, very easy question. Computation of total income. Then I will calculate what? Then I will calculate the tax liability also. So to calculate total income, I need salary income. Do I have salary income in the question? No, no need to write also. I need house property. Do I have house property? No house property. Do I have PGBP? No PGBP. I will directly start from capital gains because in the question capital gains income is there. Okay, no? So now I will start from capital gains. See, other incomes which they are saying no might be my PGBP, salary, and house property. It might be those incomes, but I'll add them in the end. Okay, no? Capital gains on transfer of what? 100 bonus shares. and 100 purchase shares. Okay. So capital gain. To calculate capital gain, I will first take full value of consideration. What will be the full value of consideration? It will be my sale proceeds. So can you do 100 into 4000? It will be 4 lakhs. For bonus shares also the same sale price I have received. Okay. Now full value of consideration is this. Then out of this, instead of doing the calculation like this, no, wait, capital gains 100 shares. Okay, this is okay. Less transfer expense 1% brokerage. So 1% of 4 lakh will be 4000, and here also it is 4000. Now I will get net consideration 3,96,000 and 3,96,000. Okay, sir. Minus cost of acquisition. Now for 100 purchase shares, the cost of acquisition will be determined as per 55 to AC, because these shares were acquired prior to 1st February 18 and transferred in 24-25, meaning on or after 1st April 2018. And at the time of purchase also STT was paid, and at the time of sale also the STT is paid. And the shares are long term. 100 purchase shares are long term. But 100 bonus shares are not long term. Their period of holding is less than 12 months. Yes or no? So, cost of acquisition for 100 bonus shares will be how much? Nil only. Because the bonus shares are issued on or after 1st April 2001 and also on or after 1st February 2018. Yes or no? Whatever bonus shares which are issued on or after 1st April 2001 as well as on or after 1st February 2018, what is the actual cost? I will have to take nil only. But for the 100 bonus shares which are purchased, I will have to now determine the cost of acquisition. Can I take actual cost? Yes. Actual cost was how much? I acquired those shares for 1000 per share. So 1000. And at the time of acquisition, I did not pay any STT or brokerage. Yes or no? So tell me, 1000 into 100 will give me 1 lakh. 1 lakh rupees, or what is the fair market value? 2000 as on 31st January. 2000, no? So 2000 into 100 will be 2 lakh. But remember, this 2 lakh rupees of fair market value cannot be more than 2 lakh rupees of fair market value cannot be more than my selling price. Selling price is 4 lakh. Fair market value as on 31st January 2018. Fair market value as on 31st January 2018, which I am going to take as my cost, 2 lakh rupees, cannot be more than the selling price. Is it more than selling price? No. So I can take fair market value of 2 lakh or actual cost 1 lakh, whichever is higher. So can I take 2 lakh rupees as my cost? So if I take 2 lakh rupees as my cost, what will happen? 3 lakh 96 minus 2 lakh, I'll get a long term gain of 1 lakh 96. Yes or no? Okay. So what I'll do now? I'll take cost of acquisition. This will be 2 lakhs. And how did I get 2 lakh? Under section 55 to AC. 2 lakh rupees. And what I'll do the calculations over here. Cost of acquisition. A, actual cost, which is 1 lakh. How did I get it? 100 into 1000. Or B, fair market value on 31st January 18, which was 2 lakhs. Or sale price, sale proceeds. How did I get this 2 lakh? 100 into 2000. And sale proceeds is 100 into 4000 is 4 lakhs. So what I'll do whichever is lower here. That is 2 lakhs only. Okay. Now this 2 lakh, I will ignore this 4 lakh then. Okay. 2 lakh or 1 lakh. Whichever is higher. So higher is 2 lakh only, which I am taking as cost over here. Got it, sir? And cost of the bonus shares is nil. Very good. Now remember, even if I am calculating the long term gain for these 100 shares, long term gain is calculated under section 112A. Hello? Long term gain is calculated under section 112A. No indexation will be available in the cost. Okay, no? Will you remember this? Very good, sir. So, what will be my capital gains? Sir, capital gains here will be 1,96,000 and here the capital gain will be 3,96,000. Is it LTCG under section 112A? Yes. And is it STCG under section 111A? Yes, sir. This is STT paid short term gain, no? How did you know that this is long term, this is short term? So for that you saw period of holding. What was the period of holding? For these shares, 1st April 2007 to 1st October 2024. 1st October only, no? Yes. And for bonus, it was 1st December 23. So from 1st December 23 to 1st October 24. Done. This is greater than 12 months and this is less than 12 months. Therefore long-term capital asset, therefore short-term capital asset. Hence the capital gain calculated is long-term here and short-term here. Understanding, sir? What is happening in your life? Okay, so now you have calculated the capital gains. Now other incomes are also there and IFOS is also there because you are getting dividend in this year, 1st May 2024. Please check on all the shares before you are transferring on December. Hello, before you are transferring in October, before you are transferring in October, in the month of May, on all the 200 shares you are getting what? Dividend of 2000 rupees. Okay. Did you all get this capital gain? Everyone? Did you commit any mistake over here? No mistake, no? Perfect. Very good. So see, now if I'll say that under the head capital gains, under the head capital gains, I have two incomes. One is my LTCG under section 112A and another is STCG under section 111A. LTCG was 1,96,000 and STCG is 3,96,000. This will be my capital gain income. And now, do I have IFOS? Yes. Under the head IFOS, can I take dividend income? That is 200 shares, and per share how much dividend? 10 rupees dividend you are getting, no? So 2000 rupees here. And wait, other incomes also I will write down here only as my IFOS. Okay. So other incomes were 8 lakh. Can I say my total is 8,02,000? Now if you will total 8,02,000 plus 3,96,000 plus 1,96,000, you are going to get 13,94,000. Everyone getting this? This is your gross total income minus chapter 6A deductions. No information given in the question, and even if the information was given, I was not able to get chapter 6A deduction because I am following 115 BSc. Getting my point? So when you follow 115 BSc, you don't get chapter 6A deductions also. 2-3 deductions under chapter 6A which are there, which you can claim, but all the chapter 6A deductions are gone. I will not be able to claim. Nil. So my total income now will be how much? 13,94,000. Now on the same total income, now I have to apply what? Tax rates, and my tax will be calculated. So my total income, which is 13,94,000, out of this 111A short term capital gain is how much? How much, sir? It is 3,96,000. Sir, 112A long term gain is there? Yes, sir. How much? 1,96,000. Sir, balance total income is there? Yes, sir. How much? 8,02,000. Done, sir. Now, you must have applied the normal tax rates, Akshaya. You must have applied the normal tax rates. Oh, old study mat. Ayyo. The same question is there. Okay. So, can I apply 20% directly on this? Why 20%? Because the transfer was made on or after 23rd July, 1st October. Yes or no? So 20% will be how much? 79,200. This is the tax. From this up to 1,25,000, I will not calculate any tax. Yes or no? And excess is how much? 1,96,000 minus 1,25,000, you are going to get 71,000. On that you are going to apply 12.5%. Yes or no, sir? Into 12.5% will be 8,875. Now on this 8,02,000 you are going to apply 115 BSc rates. Okay. So up to first 3 lakhs 115 BAC rates. First 3 lakhs you are not going to pay any tax. Then 3 lakhs to 7 lakhs. On this 4 lakh you are going to pay 5%, meaning 20,000. And wait, from 7 lakh to 10 lakh it is 10%. So are you going till 10 lakh? No. 7 lakh to 8 lakh 2000. 1 lakh 2000 you are going to pay 10%. That is 10,200. So can you tell me the amount of tax? 30,200. Understood, sir? So now what will be my tax on total income? It will be 79,200 plus nil plus 8875 plus 30,200. I am getting 1,18,275. Everyone getting this? Wait, tell me, is your total income more than 50 lakhs? No, no surcharge will be added to the tax. Yes or no? Is your total income less than equal to 7 lakh 7? Because you are following 115 BSc, so you have to check what rebate. For rebate, total income 7 lakhs. Yes or no? So is your total income less than equal to 7 lakhs? No. So no rebate will also come. Directly apply 4%. Add health and education cess at the rate of 4%. So 4% of this amount will be 4731. Total 1,23,006, and you have to round off to the nearest multiple of rupees 10, 288B. So you'll round it off to 1,23,010. This will be your final tax liability. Got it? This type of question, please see this type of question before exam. Revise this question once, because this type of question can be asked in MCQ also. A case study will be given and 4-5 questions, small questions will be made on this. So you are supposed to do the calculation on the calculator and choose the correct answer. And if asked as a descriptive question, it will carry minimum 8 marks. Trust me on this. Okay? So will you be able to solve the questions like this? Perfect. Now the last question. Last question we are going to solve. One is done, no? Now the last question is illustrations. So in your illustrations, mark this question also as important. Illustration number 13. See. Illustration number 13. Calculate the income tax liability for the assessment year 25-26 in the following cases. See, 4 assessees are there. A, B, C and D. Out of them, only one is a resident and his age is 81. So he is a super senior citizen. If you are applying normal rates, shifting out of 115 BSc, then you will have to take the basic exemption limit 5 lakh rupees. But see, if you are not shifting out, no? If you are not shifting out, meaning that you are staying in 115 BSc, you are following default tax regime, no? Then in that case, for all of them, the basic exemption limit remains same, 3 lakhs only. Hello, sir? No higher basic exemption limit, even if you are a resident, even if you are a non-resident, if you are a senior citizen, if you are a super senior citizen, will not make any difference. The basic exemption limit for all will be 3 lakhs only. Okay? So remember, on your total income, which is other than long-term capital gain, So the total incomes are given, and this total income does not include your long term gain. So on this total income, either you will apply normal rates or 115 BSE rate, as the case may be. Yes or no? And on the long term capital gain, which they are telling you, assuming that the transfer took place before 23rd July, before, meaning that the long term capital gain is calculated after taking indexation and all. So that long term capital gain at that time was taxable at the rate of 20%. Yes or no? But remember, for the first long term gain earned by Mr. A, tax will be paid under section 112 at the rate of 20%. Okay. For the second Mrs. B, the tax will be calculated under section 112A at the rate of 10% over and above 1 lakh. Yes or no? Over and above 1 lakh. So at the rate of 10% over and above 1 lakh, because the STT paid short term gain is given 10,000 rupees. Now just imagine 10,000 is the gain to be taxed under 112A, but that will be taxed only if the capital gain is more than 1 lakh. No, how much is the capital gain? Only 10,000. So the entire 10,000, no tax will be paid. Getting my point? Now 60,000 on sale of agricultural land in rural area. Don't you think this capital gain shouldn't have been calculated at the very first, at the very first moment? It should not be calculated only. But even if they have calculated and given it to you, will you charge any tax on this? No, because rural agricultural land is not a capital asset, and the capital gain arising on transfer of rural agricultural land is your agricultural income fully exempt. Okay. Next, for Mr. D, there is no capital gain only. Now, if Mr. A, Mrs. B, C, and D pay tax under default tax regime, what will be your tax liability? If they exercise the option to shift out of the default tax regime, what will be your tax liability? Okay, no. So here they are saying that you are following 115 BSE, and here they are saying that you are not following 115 BAC. So let's start. Guys. If 115 BAC followed, okay, so first of all I'll have to take total income other than capital gains, and in that I will have to add long term capital gain on transfer of vacant plot of land, listed equity shares, then rural agricultural land. Okay, this is A, B, C and D. Done, no sir? A, B, C and D. Now tell me one by one. For A, for B, C and D, what is the other income which they have given in the question? It is 240, 310, 590, 240, then 310, wait, 310 and 590, and last one, how it is, how much is for last one? 4,80,000. So for last one it is 4,80,000. Now vacant plot of land 85,000. I will write down 85,000 over here. Dash, dash, dash. Listed equity shares 10,000 I will write in the second column. Dash and dash. Rural agricultural land dash, 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 dash. Rural agricultural land I will not write only. I have deliberately written, but I will not take that capital gain in my total income because that is not taxable. So instead of writing dash, I will do nil. Okay, since it is not taxable. Now can I calculate my total income now? Can you all calculate the total income, guys? Here it will be 2,40,000 plus 85,000. You will get 3,25,000. 3,10,000 plus 10,000. You will get 3,20,000. Here it will be 5,90,000. Here it will be 4,80,000. Okay. Now pay attention. This is NR, NR, R, NR. This will be useful for rebate. Rebate is available only for residents. So only in the third case the rebate will come. All the other cases don't even talk about rebate. Okay, no? Now pay attention. Can I say this should be my final total income? This is my final total income and I will apply the tax rate on this only. So on the entire 3,25,000, should I apply 115 BSE rate? No, 115 BSE rate will be applicable on 2,40,000. So out of the total income, if I calculate tax on first 2,40,000, total income except LTCG on first 2,40,000. So what is the total income except LTCG? It is 2,40,000. On that 2,40,000, what will be the tax? It will be nil because the basic exemption limit is 3 lakhs. Okay. Now, what will be the tax on LTCG under section 112 or 112A? Okay, no? So, under section 112, what will be the tax on 85,000? Wait. Don't be in a hurry. Do you have 2,40,000? Are you going to pay any tax on 240? No, because your basic exemption limit was 3 lakhs. So still you have unexhausted basic exemption limit of 60,000, which could have been adjusted against long-term gain if you were a resident. But since you are a non-resident, that amount of unexhausted basic exemption limit cannot be adjusted out of your capital gain. So on the entire amount of 85,000, now you are going to pay tax at the rate of 20% because the transfer was made prior to 23rd July. Yes or no? So can I say the tax on your long-term gain of rupees 85,000 minus unexhausted basic exemption limit, which is not available here, at the rate of 20% will be 85,000 into 20% will give you 17,000. Did you all get this? Now calculate the total tax. Total tax will be 17,000. This is your tax on total income. In this tax, less rebate under section 87A will not be allowed. Why? Because you are a non-resident, no rebate. So tax on total income after rebate is 17,000 only. You'll add health and education cess at the rate of 4%, which will be 680. So here your tax liability will be 17,680. Did you all understand this much? Now coming to the second case. Second case, how much is your total income? 3,20,000. Out of that, 10,000 is your long-term gain. Forget about that 10,000. Are you going to pay tax on 3,10,000? So can I say your total income except LTCG was 3,10,000? On that you will apply 115 BSE rate. So on the first 3 lakhs there is no tax. But can I say on the remaining 10,000 you are going to pay 5%, 500 rupees. So 500 rupees will be the tax on your total income except LTCG. Now are you going to pay any tax on your LTCG 112A? No, because that is within the limit of 1 lakh. So no tax is required to be paid here. So LTCG was within the limit of 1 lakh. Hence you are not paying any tax. Okay, no? Now tell me, 500 plus nil will give you 500. This you could have taken as a rebate because your total income was less than or equal to less than 7 lakhs. But you cannot claim because in this case also you are a non-resident. Can you see? B is also non-resident. So no rebate will be available here also. So 500 will be your tax. 500 into 4% will give you 20. So total tax will be 520. In the third case you are supposed to be a little bit careful. Okay. So now your entire income is what? Normal only, no long-term gain. 5,90,000. Are you going to pay tax? Yes. On the first 3 lakhs, even if you are a super senior citizen, but you are following 115 BSE, on the first 3 lakhs, no tax. 3 lakh to 7 lakh, you are supposed to pay 5%, but you are not going till 7 lakh. 3 lakh to 590. On this 2,90,000, you are going to pay tax at the rate of 5%. That will be 14,500. Everyone getting this? So are you going to pay 14,500 tax? Yes. No tax on your capital gain because that capital gain is fully exempt only because that was from rural agricultural land. Yes or no? So your tax liability in this case will be 14,500. Now pay attention, on this 14,500, will you get any rebate? The answer is yes. Because your total income is less than 7 lakhs. total income is less than 7 lakhs and you are a resident individual and you are following 115 BSc. That is why we are checking 7 lakhs. Yes or no? How much will be the rebate you can claim? The entire tax or 25,000? Whichever is lower. Can I say entire 14,500 you will get as rebate? Now there will be no tax liability, no cess, meaning your final tax liability will be nil. Will you remember this? Last one. On 480, are you going to pay any tax? Yes. Up to first 3 lakhs, no tax. And 3 lakh to 4 lakh 80, 1 lakh 80, you are going to pay 5%. So on 1 lakh 80, 5% will be 9,000. And there is no long-term gain. So no tax on long-term gain. Are you going to pay 9,000? Yes. But you are not going to get any rebate here also. Why? Because you are also a non-resident. So your tax liability will be 9,000. Okay. On that, calculate 4%. It is 360. So it will be 9360. Everyone got this? This is when you follow 115 BSc. Same thing, copy and paste. If you don't follow 115 BSc. Okay, no? Now the things will be a little bit different. Not entirely different, but little bit different. Okay, no? So copy and paste the same page. See, now what I'll do? I'll do the same calculations, but I will not follow 115. All these things will remain same, but now my tax liabilities will change. How it will change, how much will be the final tax and all, those we are going to see now. Shall we start? The total income and everything, total income remaining same, there is no change. But now I am not following 115 BAC. Yes or no? Now normal tax rates must be applied on tax on normal income. Okay, no? So what is my total income except LTCG in first case? 2,40,000. And what was my age? 45. Even if I would have been a resident, no, I would have been a normal individual. Basic exemption limit is 2,50,000. So is my total income within the basic exemption limit of 2,50,000? Yes. 10,000 is unexhausted basic exemption limit. But that cannot be adjusted against my long-term gain because I am a non-resident. So even if I am having a unexhausted basic exemption limit of 10,000 in my first case, still I will not be able to use that unexhausted basic exemption limit against my long-term gain because my status is non-resident. So what will happen here? Tax on LTCG, tax on total income except LTCG will be nil only. And on LTCG my tax will be 17,000 only, the same tax. Yes or no? And what will be my total tax now? 17,000. Will I get any rebate? No rebate because I am a non-resident. So tax after rebate will be 17,000. Apply 4%, which will be 680 again, and tax liability will be 17,680. Everyone getting this? Sure, sir. Now the second case. Second case 3,10,000. And second case also non-resident, even if the age is 62, not a senior citizen. Hello? Because the status is non-resident. So what will be the basic exemption limit which will be applicable? 2,50,000. So up to 250 no tax. So can I say my total income except long-term gain is 3,10,000, which is more than 2,50,000? By how much? 60,000. So on that 60, any total income over and above 2,50,000 up to 5 lakhs. How much tax I have to pay? 5%. So on the 60,000, I will calculate 5%. So 5% of 60,000 will be 3,000. So that 3,000 tax I am supposed to pay on my normal income. But on my LTCG under section 112A, I am still not liable to pay any tax because that LTCG under section 112A is only 10,000. Yes or no? So this will be nil. Now my tax here will be 3,000, which I cannot claim as rebate because I am a non-resident. So my tax will be 3,000. 4% of 3,000 will be 120. Can I say 3120 will be my final tax liability? Now in the third case, be very careful. In the third case, my age is 81. Can you see? And I am a resident also. So I am a super senior citizen. For me, the normal tax rates applicable will be 5 lakhs. Up to 5 lakhs, no tax. 5 lakh to 5 lakh 90. On this 90, I have to pay 20%. So 20% of 90,000 will be 18,000, guys. And I will not get any rebate now. Why? Even if I am a resident, but I am not following 115 BAC. So the rebate limit, the total income for rebate, I will check 5 lakhs. If my total income is more than 5 lakhs, I cannot claim any rebate. Yes or no? So I'll have to pay entire 18,000. But on that 4%, will I get any rebate? No. No rebate. So entire 18,000 I pay, and on that I will calculate 4%, which will be 720. It will be 18,720. Yes or no? Last case, I am again a non-resident. So basic exemption limit will be 2 lakh 50. I cannot take 3 lakhs or 5 lakhs. See, the age is also 82. I cannot call myself a super senior citizen because I am a non-resident. Okay. So 2 lakh 50 up to 250 there is no tax. 250 to 480 it is 2 lakh 30. On that 2 lakh 30 I'll pay 5%. 5% of 2 lakh 30 will be 11,500. Is there any tax on long-term gain, etc.? No, no tax. So what will be my total tax? 11,500. Will I get any rebate? No. Since I am a non-resident. 11,500 into 4% will be 460. 11,960. This is my final tax rate. Let's check the amounts. 17,680, 520, nil, 9360. 520, nil, 9360. If you follow 115 BSc. Yes or no? But what if you don't follow 115 BSc? 17,680, 3120, 18,720, 11,960. 17,680, 520. Yes or no? Sorry. Now here. 17,680, 3120, 18,720, 11,960. Can you see the same answers? Yes or no? So, with this, the question is over. And also, the chapter is over.